Hi there, Serial Trader here. I'm going to have a look at the major U.S. indices, and I want to focus on the, in this case, is the 2-hour chart of the S&P 500, SPX. So I just want to focus on the action from our March 4th low, okay? And from there, I think we have a fairly clear initial one up, ABC down for a 2. This is wave 3 up. And I've only shown select subdivisions here. I've shown the subdivisions of 2 and the subdivisions of 4. But of course, if you look for them, you do get the subdivisions for wave 1 and wave 3. But just for clarity or lack of clutter's sake, I've left them out here. So what I think we're currently in now is this 5th wave. And before I go there, I just want to discuss the nuances of this wave 4. So with wave 2, it's simple. You just got down, up, down, ABC zigzag. Very clear, easy to label. For wave 4, we have the potential labeling of A, B, C for a running flat. That's where we have a 3 down in A 3 up in B to a new extreme, and then a 5 down in C. Now, if it was an expanded flat, it would have gone below the A wave low, but in this case, a running flat doesn't quite make it. And that's kind of an underlying bullish sign when you can't even take out that prior low, even though you're looking to do so. And then we've had the reversal up and obviously making new highs. So running flat, that's definitely a potential labeling for wave 4. But another, I think, very viable labeling, not that it makes a whole lot of difference, but for those that are interested in these little Elliott nuances, this is also a good labeling scheme where we got A, B, C, D, and E for a running triangle. And let me just get that degree down where I want it. And in that case, we would anchor our wave 4 low instead of at this pivot here, just over here, not a huge difference. And then, of course, you would have your triangle trend lines. You got the BD. And you'd have the AC. And that's what you would do with that. Now that I've shown you either of those scenarios, and I mean, it doesn't really matter. Either way, I think it's best viewed as a 4th wave, whether it be a flat or a triangle. Let's just go with the interpretation that's flat, but again, doesn't really matter. Either way, it's done, and we're already making new highs, so we can be confident that that sequence, that corrective sequence, is complete. Just kind of a sideways correction, right? Okay, now I want to start making some projections for this 5th wave, but just quickly before I do that, so every time you do 5 waves up and complete it, there's a possibility you just finished a sequence, right? Now, in this case, I am very confident that we're about to finish the sequence once we complete this next wave up here. We will finish the sequence from that March 4th low. But there's also the possibility that that will finish a larger sequence from our pre-election low in October, October 2020. And there's also a possibility that will finish a larger sequence, from our, I guess we'll call it pandemic low in March of 2020. Now, the bottom line is, other than just making some estimates or assumptions, you don't know what degree you're about to finish until you at least get some price action on the other side of it. And let me explain. So say we do our 5 waves up here, we finish, and then we get a relatively minor corrective looking pullback like this that doesn't even make new lows. Okay, still makes a higher low above that March low there, and then we start heading back up. Well, obviously, we didn't complete a large degree wave up because we only got a small degree pullback, right? But if we get a very sharp, severe, like heavy downdraft, taking out, let's go to the daily chart, taking out multiple weeks, multiple prior supports, clear 5 waves down. Well, then we may have started a larger degree move down, and then you can start looking for that that corrective move up and maybe some selling opportunities or shorting opportunities. So I don't want to jump the gun here. A lot of people are calling for, the multi-generational top and the biggest bear market ever, et cetera, et cetera. Hey, it's possible, but until you actually start seeing some of that kind of action, and it should be obvious, right? A downdraft like that, you don't have to look too hard for it. It's going to be right in your face every day. Bloodbaths everywhere. So until we get that kind of action, I don't want to make any assumptions. But what I am very confident of is that we are about to finish a 5-wave sequence of some degree, and we will get some sort of downward action after we complete. So all that being said, let's start making some projections. So a couple things I want to do, some channeling. So we'll draw the Elliott final channel, and that's where you have your wave 2 anchored, and then you put it onto the wave 4 anchor in parallel off of the wave 3 high. And seeing as how you could either call this the wave 4 anchor or this the wave 4 anchor, as far as the channel is concerned, it really won't make any difference. They line up quite nicely, whether we have the running flat wave 4 or the triangle wave 4. Okay, so we got that. Then, okay, so for our 5th wave objectives, well, there's some common objectives. So wave 3 in this case is longer than wave 1, so we could say wave 3 is our extended wave. So that means we're less likely to have wave 5 extend, because typically only one of the waves in a 5-wave sequence is extended. So since wave 3 is extended, we might look for wave 1 versus 5 equality. Okay, and let me just give us some more room here to see up top. So using this as our wave 4 anchor, wave 5 versus 1 equality would come in at 43.8912. Okay, so that's one technical confluence we're going to keep an eye on. Again, depending where we anchor our wave 4, we'll slightly change that. So let's pretend we have the triangle wave 4 instead. Again, doesn't change a whole lot, but brings us up to 4407.86. So we can see we have kind of a confluence around that 4400 area for wave 5 versus 1 equality. Another common objective is the distance traveled in waves 1 through 3, okay, off of wave 4 versus wave 5, and a 618 relationship of that is quite common. And again, that brings us up into that 4400 area. So we're starting to develop some nice technical confluences. Again, depending where we anchor our wave 4, so I'll anchor it on the triangle wave 4 scenario. It won't make a huge difference, but a little more. That brings us up to 44.36.54 for that relationship. Okay. And now we can just do some reverse fib objectives. Or I should just say extension of the range objectives, if that's more clear. And let's see, where do I want that? Just bear with me. I think we'll just take the widest range of this sideways movement here. And let me just get the right low right there. Okay, and then we'll do our typical projections, the 1.382 and the 2. Okay, so the 2 gets us to 43.19. 1.32, I mean, we're not far off that already, would be 42.57. So I happen to think that we'll exceed those targets, right? Kind of like in this 4400 area as an objective. Okay, and then also you typically hit the top or even slightly throw over the top of the Elliott final channel. So that kind of lines up, depending on how time unfolds here, that may line up decently with 4400 area as well. Okay. So how about when will this happen? Like, what are we looking at as far as timing here? Well, okay, there's some other things we can do. So if we do the time elapsed in wave 1 and project that off of our wave 4 anchor, and again, depending where we anchor wave 4, so I'll do a couple of those. And again, it won't make an enormous difference, but just to get a little zone here. So if wave 5 anchored off of either of these potential wave 4 termination points, if wave 5 is equal in duration to wave 1, which wouldn't be unreasonable, we get some dates here. Let's see, what do we got? We got the 17th of May and the 19th of May. So that's if wave 1 is just equal in length to wave 5. Now, we could also be closer in length to this wave 3 as far as time elapsed. So let's do that. Okay. So let's just take the duration of wave 3. Again, project that off of both of our potential wave 4 anchors here. Right there. Okay. So that gives us 17th of June. Now that's probably, I'm suspecting that that's going to be longer than what it actually takes. I'm kind of thinking towards the end of May, early June, as you often have major pivots in a market around that time. It just seems to often work out that way for whatever reason. Let me just check, make sure I got this anchored right. Okay, so 26th of May. That's one option. I like that, 26th of May. That's getting closer towards the end of the month. And just one more time, make sure I did that one right off of that anchor. Oh, that's more like it. Okay, yeah, that one that was well into June. I don't know what I did to get that, but that was incorrect. So these are our two potential time duration wave 3 versus 5 equality relationships. So 26th of May, 27th of May. All right, that's pretty close. So towards the end of May, I kind of like that. I think we might be jumping the gun here, looking for it on the 17th or 19th of May. Seems like you wouldn't get a major top, you know, at such an unusual point in the month. Usually it's near the month end, right? Okay, so now we have some price and time clusters to work with. So I kind of like towards the end of the month, I kind of like that 4,400 area. And of course, now, depending where we anchor our wave 4, we either got something like this going, so we may have the 1, the 2, 3 in progress. Sorry, lost that there. We may have the 1, 2, 3 in progress, then we need the 4, then we need the 5 of the 5, right? So that could very well be what we got going on here. Or again, depending where you anchored the wave 4. So if we anchor the wave 4 here instead with that triangle scenario, it wouldn't change a whole lot. We would just be a little earlier on in our development potentially, right? So just keep that in mind. What I really want to see is a clear 5-wave advance with all the, you know, good-looking subdivisions come into this time and price cluster. And then at that point, I think that may be, I mean, if you're just long, that'll certainly be a good area, I think, to sell at. Or if you want to try and catch a down move, and I think there will be some sort of down move, again, very open-minded as to what degree, but I think at minimum a, you know, tradable down move. I think that would be the area to start looking at putting on some bearish positions to do that. Okay, I think that's all I need to go through here on the SPX chart. I think it's pretty clear that we're working a 5th wave and looking to complete, you know, in the not too distant future here. And then we'll have to see what happens after that. And maybe once we get to that point where I think we're at or near that 5th wave completion, I'll do another video and discuss what I might be doing at the time or what I'm looking at, etc. Okay, so that's that. We'll go to the Thinkorswim candlestick chart. Obviously, bullish candlestick on Friday, new all-time intraday and closing highs, so certainly no no reversals there. Weekly, same idea. Weekly trend certainly remains up and intact. Don't need to spend a whole lot of time there. Okay, Dow Jones Industrial Average, same idea. Weekly, same idea. And I believe the Dow will be completing a 5th wave of some degree as well. Okay, so all the indices are, well, I wouldn't say all, but fairly lined up here. Nasdaq Composite. So interesting on the Nasdaq Composite, we had this three-wave correction into our March lows, right, on the Nasdaq, and then this was looking like 1, 2, 3. We're gonna get the 4 and the 5, but we've got overlap here on the composite. So does that mean, you know, oh, uptrend's over, going down? Well, I don't think so. So weekly candle on the Nasdaq, yeah, it was a down week, etc. Obviously, the wave count doesn't work for a 1, 2, 3, 4, 5 on the composite, but on the NDX, so the Nasdaq 100, and maybe you think this is the more valid index, and maybe it is, we have our same kind of three-wave correction into the March low. Now, this still works as a 1, 2, 3, I think, ABC expanded flat 4, and you can see we did not overlap. This would be our overlap level here on the NDX, Nasdaq 100, and you can see we did not overlap, and we also have this 50-day moving average kind of right there to catch. So I like this as a 1, 2, 3, 4, and we're, you know, beginning our 5 up to finish the sequence from March on the Nasdaq 100. So in this case, the composite, I don't know, maybe just ignore it. Go with the Nasdaq 100. That works for me in this case. Okay. So that's that. VIX. VIX is still sideways to down, and that's overall bullish for stocks. Okay. Not much to say there about VIX, other than let's go to our VIX VVIX tool. And we're also on a buy signal. So here I've just pointed out the most recent development, I guess. And this is where we had the divergence between VIX and VVIX. As you know, we were in a bit of a corrective period there, this wave 4, which was either a running flat or a triangle. But either way, we had that sideways corrective period. So we made slightly higher highs in VIX, but VVIX made lower lows, measured from the same. So relative lower lows against relative higher highs. So that is the VVIX-VIX divergence. Then VVIX got nicely below the red moving average. SPX got above the blue moving average. And that was our most recent bullish buy signal. And it is still very much on right now. All right, that's all I got for now. So I would think keep your eyes on the markets. Heading towards the end of the month kind of looks like a good time. And once we got a clean looking 5-wave subdivision within that wave 5 to the upside, maybe we come into that 4,400 zone, plus or minus, I think that could be a pretty compelling area to start looking at some bearish positions, or at least unloading some long positions that you've been holding. So we'll make a video when we get closer to that point. All right, Serial Trader signing off.